Why is the Indian government reconsidering its stake sale plan in Hindustan Zinc? This is the question at the heart of our discussion today. Initially, the government had set its eyes on divesting its stake in Hindustan Zinc, where it holds a significant minority share. This was part of a broader strategy to meet its divestment target for the year. But as we'll soon find out, this straightforward plan has been muddled by recent developments. With this initial plan set, let's delve into the recent developments that have led the government to reconsider. Govt may space out stake sale in Hindustan Zinc for best possible options. Earlier this year, Hindustan Zinc said it could create separate legal entities for its zinc and lead, silver and recycling businesses to help capitalize on distinct market positions. The government could delay the offloading of its 29.54% stake in Hindustan Zinc since it continues to look at its best possible options, according to a report by the Hindu business line, BL. According to officials, some of the suggestions include waiting out the decline in metal shares and timing the stake sale at an appropriate time, while others suggest that the offload should be held back till the time the committee report on the listing of mining businesses of the firm is reviewed. Earlier this year, Vedanta's Indian zinc unit said it could create separate legal entities for its zinc and lead, silver and recycling businesses to help capitalize on distinct market positions and attract investors as part of the wider Vedanta Group's efforts to reduce a multi-billion-dollar debt load. The company has appointed external advisors for a comprehensive review of its corporate structure. Some officials are of the opinion that the restructuring might help improve the valuation of the government stake at the time of the stake offload. According to industry insiders, the government want to make sure that its members stay on the board till the rejig plans are presented and then weigh in. Earlier this year, roadshows on the stake sale were carried out, although announcements regarding the stake sale did not happen. Hindustan Zinc's Chief Executive Officer, CEO, Arun Misra, was quoted as saying that the assessment of the corporate structure of the firm is on. Once the report is presented by the second week of November or around November end, advantages and drawbacks will be discussed. The company wants to create value for shareholders. There is no problem in getting the government on board if the valuation of Hindustan Zinc rises after the restructuring. The government's opposition to the deal has cast a shadow over the future of the stake sale plan. At the present moment, Vedanta Limited holds a 64.92% stake in HZL. In 2002 to 2003, HZL, India's largest zinc lead miner, was privatized in favor of Vedanta, with the government's 29.54% stake categorized as public float. In 2021, after Vedanta lost the case to acquire the residual stake from the government, the Supreme Court allowed the government to exit by offloading the stake through public offers. This reconsideration of the stake sale plan has significant implications for the investors of both Hindustan Zinc and Vedanta. For starters, the uncertainty surrounding the company's future could lead to investor apprehension. With the government's stake sale plan hanging in the balance, investors might be left questioning the stability of their investments. This could potentially lead to a decrease in the inflow of investments, further impacting the company's financial health. Moreover, the potential legal action threatened by the government against the proposed acquisition can also lead to a significant decrease in share value. With the government being the largest minority shareholder, such a move could induce a sense of instability among the investors, resulting in a possible sell-off. This, in turn, could cause a sharp decline in the share price, affecting the investor's portfolio value. Additionally, the delay or cancellation of the acquisition plans can also impact the strategic growth plans of Hindustan Zinc and Vedanta. This might limit the company's expansion and profitability in the long run, thereby affecting the returns on investments. Also, the fact that the government's divestment plans are jeopardized might affect the overall business sentiment in the country. The government's divestment plans are usually seen as a sign of the economy's health and stability. A delay or cancellation might send a negative signal to the market, affecting investor confidence on a larger scale. Thus, the government's reconsideration of its stake sale plan in Hindustan Zinc has significant implications not just for the company, but also for its investors. So where does this leave us? We've delved into the Indian government's potential change of heart regarding its stake sale in Hindustan Zinc, largely due to the company's proposed acquisition of 2 Vedanta Group subsidiaries. This move has raised red flags, causing a dip in share prices and stirring concern among investors. The government, a significant minority shareholder, has voiced its opposition, even hinting at legal action. These developments may not only jeopardize the government's divestment plans, but also impact Hindustan Zinc and Vedanta's investors. Only time will tell what the final decision will be and how it will affect Hindustan Zinc and its investors. Stay tuned for more updates on this unfolding story.